Welcome back. You're watching Markets in Noon on ET Now with Michelle D'Souza and my colleague Pankaj Podar. And let's talk about HDFC Life and Exide Life. Both of these counters, or rather Exide Industries, both of these counters are in focus today. You have a mega deal that's brewing in the life insurance space. And to talk more about that, we have Vibha Padalkar, who's the MD and CEO of HDFC Life Insurance. Good afternoon, Ms. Padalkar. Thank you for joining us on ET Now. And firstly, congratulations on the announcement that the company is looking to acquire Exide Life. Could you tell us what's the rationale for this acquisition, and also what are the synergies that we can expect?
Some of the big ticket positives, and this is something we've been saying as to what do we look for in a potential target company, is that it needs to have credible distribution, which Exide Life has. It is very strong in its agency channel as well as in some of the partnerships on the broker front, and hence that's complementary to our business. It is also present in tier 2 and 3 towns and has a fairly good stronghold in some of the regions in the south. Second aspect is the quality of backbook. Again, we have looked at their embedded value. It has also been certified by an external actuarial firm of repute. And that will be accretive to our embedded value. It's about 10% of our EV. And third aspect is that in terms of the quality of business and its management team and the cultural aspects of it, that too in terms of the ethos, and that will also be very important as we integrate Exide Life post all regulatory approvals into HDFC Life. Very important that the DNAs are reasonably similar. So this particular opportunity had all of them, so tick in every box, and that's why we were fairly happy to go ahead with it.
Ms. Padalkar, let's talk about in terms of the data that is actually present in the public domain. Exide Life's market share has actually been declining slightly. What is the kind of advantage that actually you would get in terms of agency channel, also your cost benefits and scale benefits that we can expect from this acquisition?
Right. On the market share front, they're about 1.3% market share, remain somewhat steady over the past few years. And it's a scale issue for them, like for a lot of the smaller players, wherein beyond a certain point, they're finding it difficult to scale it up. The agency channel that they have built, today they have just short of about 37,000 agents, and out of that, a lot of them are highly productive agents. And that will add about 30 to 40% to our agency force. And also in terms of top line APE growth on the agency channel, that will add about 40% to our agency channel. Another interesting aspect, like I mentioned, is that they are reasonably strong in South India and in tier 2 and 3 towns. So about 40% of their business comes from those geographies, and hence it is complementary to our business, which is a lot more metro focused, or at least the top 10 cities. And this combination is a potent one. And final point is in terms of what the agency channel sells, large proportion is in terms of traditional products as well as protection, very little of unit-linked products. And so the natural progression towards profitability and better persistency also, that roadmap is reasonably visible to us.
HDFC Life has been following balanced mix strategy. How will the product mix change post this acquisition? Will that have impact on any costing?
So if you were to look at, like I mentioned earlier, right now their product mix is largely participating products. So about 71% is participating products, and the non-participating is 13%. So almost 90% of their business is between participating and non-participating, including about 11% that they sell of protection products, and unit linked is only 5%. So we see that once the merger is complete, the entire suite of products that we have can be sold through the merged entity, and that's when we are known as a company that innovates on products, brings new products to the table. and they would be able to have access to the entire suite of products that HDFC Life has, whether in the annuity space. Retirement is a big opportunity that we've always talked about. Even in terms of protection, having combination products of protection with health is another opportunity, and so on. But that will take time, and it will be post-regulatory approvals.
How would the shareholding change post this deal? Also, what is the rationale for cash payout after the share swap ratio?
The shareholding, so first of all, the consideration is a mix of shares and cash. So about 89% of the consideration is in share swap, and about 11% is cash. So about 726 crores will be cash payout. The rationale for the cash payout is, from the seller's point of view, for the transaction to be cash neutral, because there will be a tax incidence on them on consummation of this transaction and shares being issued to them. And that's why the relatively small element in this transaction in the form of cash. Once the share issue happens, there will be Exide Industries will be onboarded as our shareholder, and they will end up having a 4.1% stake in the merged entity. And the existing shareholders of HDFC Life, there will be about a 4.1% consequent dilution. HDFC Limited will go down from the current 49.9% to 47.9%.
Let's talk about the amalgamation of Exide Life. What is the timeline for the regulatory approvals that you all are eyeing? Also, how long can investors actually wait, or rather expect the amalgamation of Exide Life to take?
We are expecting the first stage, and this transaction is in two phases. The first stage is wherein post CCI and IRDA in principle approval for us to be able to issue shares to the seller and for this entity to become a subsidiary of HDFC Life. That is the first phase. That phase we are hoping that will take, and we should reach that milestone sometime around January. Thereafter, we will, of course, go down the NCLT approval for merger of the subsidiary into the parent company. So Exide Life as a subsidiary into HDFC Life. And that process will take as whatever is the current timelines that currently are required for the NCLT approval. But the good part is that after the first phase, when it becomes a step-down subsidiary, we should have control over the business.
Could you talk to us about the impact on the solvency ratio? Also, what sort of an impact did COVID-19 have on Exide Life's business? And in relation to that, what kind of COVID-related provisions did Exide Life undertake?
Currently, Exide Life has a solvency of over 200%. So I think in the range of about 222% is their solvency. And we would expect this to be accretive to our solvency, although small in the whole scheme of things, given size, but nevertheless accretive. From HDFC Life's perspective, in terms of the cash payout that I talked about of 726 crores, which is part of the consideration, that will reduce our current solvency by about 15%. But keep in mind that we're talking about this happening after a few months. So by that time, fresh profit generation will also happen at HDFC Life, and thereby adding back or recovering some of the solvency that would be reduced due to the cash payout. So overall, we don't have significant concerns, all things being equal, on the solvency front.
Talk to us about the valuations. Earlier, HDFC Life was looking to acquire Max Life. Now they are seeing Exide Life acquisition is at a high valuation. What will be the impact on embedded value as well as ROEV?
So Exide Life's embedded value is about 2,700 crores. We are reasonably satisfied of the quality of their EV, and don't believe that there would be any material impact to that embedded value as we take control of the entity. In terms of valuations, the Max Life deal that you mentioned was many years ago. After that, a lot has happened in terms of the growth of life insurance companies in India and listed entities in India, and also the trajectory in terms of quality. And that is reflected in the valuations as well. If you look at HDFC Life itself today, we are over 90% 13-month persistency, and continuing to increase on that. And we were hovering mid-80s not that long ago. So quality of business continues to increase, new business margins continue to increase, and embedded value operating profit continues to go up. And so I think going back in time is somewhat of a futile exercise, or really apples and oranges. And the way we look at this is that this deal has happened at a significant discount to listed players, is value accretive for us. There is a niche offering that interests us and excites us at a price that makes sense to us. So as a holistic package, we thought that the deal is one that makes a lot of sense from a complementary point of view for HDFC Life.
Any more acquisitions in the pipeline? Any key milestones that you can plan to achieve over the next couple of years? Important, can you just tell us, are you open to looking more acquisition?
Absolutely. Once this transaction is through and it is consummated, we will continue to scout around for fresh opportunities. We have the currency, we have a strong balance sheet, we have the appetite, we have a good management team that can look at these opportunities and also at the same time not be distracted from business as usual of the parent company, which is HDFC Life. And so yes, growth will be a combination of both organic as well as inorganic growth.
So let me take this point ahead. What would be the cash on books that you've actually set aside for your future inorganic growth? And also, what would be the nature of the inorganic growth opportunities that you are looking at?
In terms of the cash, if we have to look at one more acquisition after this one, then it will again be a combination of shares, cash, or all shares. And depending on the size of the target company, we might also have to raise capital in order to be able to fund the acquisition. But it's all into the future, and we have all these options. And like I said, we have a strong currency in terms of our market cap as well as a strong balance sheet. And this just demonstrates, if this deal is successful and goes through, this will be the first of its kind in the life insurance space that has not witnessed an M&A so far. So we will be able to build on our experiences and be able to do any other deal that seems accretive to both parties. To your question, in terms of what we might be looking for, it would have to be, like I articulated, credible distribution. And distribution is not only bank assurance like we have demonstrated here. It could be any form of distribution that is complementary to what we are trying to do. Second aspect is in terms of quality of business and quality of the back book, so that we have reasonable certainty of its being able to unwind. And third is overall in terms of the ethos of the company, so that a merger is between partners that think alike. And if these three criteria are there, we would continue to scout around for opportunities.
Ms. Padalkar, HDFC Life is actually looking to raise capital. Could you update us more on this? Also, will this capital that you're looking to raise, will it be used towards inorganic growth?
So the capital raise is really for this transaction, and by capital raise, what we mean now that we will be issuing shares post-regulatory approvals to Exide Industries, and that's the capital raise. So there will be an expansion in our capital base by the issue of shares, which is 8.7 odd crores.